Good morning, everyone, and welcome to the Quantum Leap Morning Leap. My name's Doug McKay. I'm the founder of Quantum Leap Futures. This is a subscription room. If you're interested in finding out more about what we do in here, we do a pre-market session each morning, taking a look at the macro to the micro, the structure of the market, then drilling down and setting up our trade levels for the day. And then during the course of the day, I do live analysis and trading. Please read the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in here are for education purposes only. Please trade your own due diligence, your own trade plan, and risk metrics. If you'd like to contact me, send me an email at quantumleapfutures@gmail.com or send me a Skype request to Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Or just give me a call on my cell, 647-545-8065. Love talking about the market. And of course, if you want to see more of these pre-market sessions to get an idea of what we do and our track record, you can go on YouTube and search Quantum Leap Futures. I think there's 275, 76 days of pre-market sessions up there that you can take a look at. And of course, if you like what I do, please follow me at Crazy2 on Twitter. Okay, let's just take a quick look at the news. This morning we had non-farm unemployment expected 181, came out at 271. Unemployment in Canada was expected at 7.1, came out at 7.0, and our employment change was 9.5 versus 44.4. So actually, it was pretty good. Hourly earnings came out slightly better, 0.2%, expected 0.4%, and then 5% unemployment overall for the states. We do have NISR GDP estimate coming out of Great Britain at 10 o'clock, but that's about it. This was the big news this morning. I did trade it. I want to show this. I know I show it a lot. I usually trade this on gold on the 15-minute, but I do like it. It does work on any of the other indices or futures, and this is a FUBAR. Okay, FUBAR has a volume spike. It wasn't great, but you got to take it into context. It was greater, than the 2 times the average, range for that particular volume on that particular bar. There's a large wick, same size as the body, and then it creates the tech gap, which is the move away from the 9 EMA. And then you get the inside bar, the Mr. FUBAR. So I shorted 97. I got funded at 96 and a quarter, and I held through the news and got the move down, and I closed it out for 83 and a quarter, and picked up 14 and a half points on the news. So we do have a FUBAR inside Mr. Sneaky Tech Gap here. So look for them to rotate back up the other way, come back up into this 2090 area, likely to close this technical gap. So what I usually start with each morning is the same routine. I take a look at the macro to the micro. I use a simple candlestick chart with a 9 EMA and a 20 SMA. What I'm looking for is slope and separation, strength of the trend, and where the trend is being challenged. And I start with a monthly and work my way down. You can see that we had this very strong trend upward. Last 2 months, we closed below the 9 and the 20, and then in October we popped back up, and we're currently above the 9 and the 20, and getting some slope and separation again. So the trend itself to the upside was challenged, but then they took it back, and the trend is still intact on the monthly. On the weekly, we had that downtrend through August and September, and then we took it back in October and violated the downward trend. We do have an upward trend going on the weekly starting. We do have a naked cross here at 2030, but it is on the weekly, so take the context of time into factor. But the weekly is starting an upward trend. On the daily, The upward trend is very much intact. We've got a beautiful solid slope and separation. We're holding the 9 EMA nicely. We had that technical gap that we were looking to close on the daily. They just came down and closed it this morning, and see if we break it and challenge this trend or bounce and continue. A move below, look for a possibility of coming down into the 2052, 53 area to close the tech gap on the daily. There is a naked cross down here as well at 1938, but again, it's on the daily, so keep it in context. On the weekly, I wanted to point out again, don't forget we've got this possible cup setting up. It's got to move down to the, where was it? Let me just pull that up so I've got it so I can bring it up here. This is the chart I put in here the other day. There's the cup. Here's where the handle's got to come down to validate the pattern. It's got to come down to the 2030. That's where that one naked cross is down there, and not get below 1975. So this is a possibility I'm looking for coming into the end of November and early December, and then see if we get a bounce and our Santa Claus rally. But we still have to see it come down to set up the pattern. Going to the intraday to take a look at where we are coming into the market this morning. You can see that we had this upward trend, and then we went sideways yesterday night and yesterday, and now we're below the 9 and below the 20, and we're getting a possible move down, and the start of a downward trend on the 4-hour. That accelerates, of course, on the 30-minute. We've got this consolidation. We had a big move down. We are getting slope and separation to the downside on the 30-minute. And then on the 15-minute, we do have this technical gap, but we are getting a downward slope here. So we are getting a downward trend coming into the market this morning. And then you can see it much better on the 5-minute. We do have a naked cross here at 2094. I discount these on news simply because of the fact that we went down and then we went right back up and we went down again. So we actually closed it out as we were creating it. And for those new in in the room today, a naked cross is where the 9 crosses over the 20 and price moves away and leaves it naked. It's like a naked VPOC or a naked gap close. The market has a very high tendency to rotate back up into these naked crosses and take them out. And you can see this one was taken out over here. I follow them on the 5, the 15, the 30 intraday and use them as targets. I also follow them on the daily and the weekly for direction in the market. And you can see we've got a nice slope and separation and a downward trend going on the 5-minute. So let's take a look at the structure of the market. We are currently now back inside of this longer term balance. This is the micro composite that I was following from February the 5th through to August the 19th before we fell out of that value area, and then we went down, put in this balance area down here, then we broke back out, accepted value higher, 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 gapped up, got into the prior balance that we fell out of, went and tested the year open at 2055, accepted value here at 64.75, and worked our way up, tried to break out of the value to the upside, got to the rule of 10, sold off at the rule of 10, tried to hold value here the last 3 days, up here at 97, and now we just fell back out, got back inside of value, and I'm looking for a move back down. 84.25 is very important today. That was the composite and the micro composite VPOC before we had it shift down to 78. So if we see this composite VPOC goes out all the way back to the beginning of 2013. So it's the most traded price all the way back to 2013. If we hold below the 84.25, look for them to come back into the 78. The first target below right now is this 8050, the CLVN and the small micro composite VPOC here at 80, where we accepted value once we gapped up. Below 74.25, that's my new line in the sand below. If we get below 74.25, then I'm looking for a bigger move to come down to the 65, 66 area and get into this distribution zone. The next major support below is going to be down here at 49.75. Anything below 49.75, I'm looking for the move to the 50% of the significant breakout candle, which is at the 2037.75 area, and come down and chop in here and mature this distribution zone. This is a pretty blunt area on the profile right now. Below 27, look for the 21.25, and I move back down into the where we accepted value higher, these three micro composites. We still have a gap closed to fill down here at 2008. I don't think we're going to get down there today. Sorry, my voice is going, but I'm looking at the big picture right now. If we hold above 2080, look for them to chop around. We could get stuck in this wick and further auction between 94.75 and this 83 to 80 level. And we're likely to do that this morning. Remember, I posted earlier in the room that of the last 2 years, the last 24 of the non-farm payroll, 20 of the 24 sold off on the news and sold off after the open of the RTH session. So I'm looking for the possibility of a downward day. I think it's going to be rotational, but I'm looking for rotational day with the downside bias down here to the 78.50 and possibly down here to the 74.25. But I think we could get stuck in this wick if we hold above this 84 and above. I'm looking to just chop in this wick before we fall out of balance. So let's take a look at what happened overnight. Let's take a look at yesterday first of all. So yesterday we were looking for a rotational day, and we certainly had that. I was looking for a rotational day with a possible upside bias if we held that key line in the sand at 90.50. Below 90.50, then I was looking for a rotational day with a downside bias to come down and test that 82.25 ATR downside target. We didn't get down there. We got to the 84.25. Remember that the old composite VPOC going all the way back to 2013 was 84.25. They came down there. Was the most traded price before it shifted down to 78.25 or 78.50, but they did buy there. The buyer stepped in, rotated us back up, and then we basically just chopped around that 94.25 area the rest of the day. I took the afternoon off and went golfing. So right now, overnight, we have a overnight high at 99. We have an overnight low at 82. And we have a Globex VPOC here at 93.50, just below our VPOC from yesterday. And we actually had a very tight range going until the non-farm payroll, and then we put overnight high and low in the on the news. So we're creating a double distribution, and we've got this LVN and midpoint and VWAP. Where was our line in the sand yesterday? 90.50. Look at where our midpoint and our LVN and our VWAP is from overnight, 90.50. So we've got the value area low here at 89, and we've got the 90.50 as the range low from Tuesday. This is going to be my main trade area today, but again, it's a range. I'm not getting long until I'm above 90.50. I'm not getting short until I'm below 89.75. My first target below, of course, is that 87 HVN. Don't need this anymore, so let's get rid of this. Let's expand this out so we can see this. Okay, and then below that, my next trade area is going to be 84. And if we get below 84, I'm looking for the overnight low to get taken out at 82. And then we've got the 8050 CLVN and micro composite. I mean, I can put these two breakout candles in here, and you can see that that 8050 is still the most accepted price before we broke out and tried to hold value higher here at the 97. So I'm still going to use the 8050 as a target. You can actually, I'm going to change it today from a target to a trade area. And for those that are new in the room, a trade area, and the difference between a trade area and a target is targets I'm looking for a move to, but I won't enter a trade there. Trade areas are also targets, but I'll also enter trades or add on to trades at those levels. So they are targets, but they're also, if they come down here and we break 80.50, I'll scale before I get into 80.50 as a target, but if we break it, I'll add on to it, or if we bounce, I might enter there as well. I don't enter at targets though. And then all our levels below remain the same. The 20-day ATR target, or ATR right now, the average true range daily for the full session is 2166. So based on the overnight high of 99, our downside ATR target today is 77.50. Below 77.50, I've moved the key line in the sand down from that 90.50 down to 74 and a quarter. What does that mean? It means that below the key line in the sand or above the key line in the sand, I'm looking for a expansion and a trend day setting up. Otherwise, it's a rotational day with an upside or a downside bias. And then below there, we've got 70.50, 66 and 64.75, and then 60.50, and then the year open at 55, and our targets down here. 45, 44 is the next big destination below 66. Then to the upside, if we hold above this 84 level, I'm looking for them to come back up into 87 and test the value area low. If we get inside of value, I'm looking for a move up into the overnight VPOC at 83.50, the naked close, and the VPOC from yesterday is at 94 and a quarter, and then look for continuation up through to the value area high, which is up here at the 98 and a quarter, and of course just above that we've got the overnight high. Based on our 82 low, again we're trading 84.50. We could get expansion of the overnight low, but right now it's 82 based on the average true range. It's running at 2166. Our upside target is up there at 2103. And remember that that 2103.50 was our main target above 2100. That's where they tried to hold value up here before they fell back inside a balance down here. So that's now become our ATR upside target. And then all our numbers to the upside remain the same. 0550, 07, 0850, 1350, and then our key line in the sand above is the 2117. That's the adjusted RTH all-time high, and then all our targets above there. So right now I'm seeing weakness. I'm looking for a rotational day with a downside bias to take out the overnight low, come down into that 78.50 area. This should be 78.50. But if we get below the 74, then I'm looking at the possibility of a trend day setting up and a move down into this next big distribution down here. Right now on the Renko with Keltner, you can see we've got the downside channel We failed to get back above the Keltner center line, and they're moving down. A move down here. It looks like they're going to put in a new overnight low before we even get to the open. But the lower Keltner line is sitting here at 81. That means we get the 82 taken out. Above the Keltner center line, above 86.75, look for a move up into that 90.50, and then a move to the upper Keltner takes us up into 92.50. Gold fell down, and where did we say it was gonna go down to? At 1091, I think was the number. 1091, it didn't hold. It's actually falling lower. I got taken out of my long that I put in yesterday, and the next big destination on gold right now, they've got to hold the 74.70. If they don't have a hold the 74.70, I'm looking for a bigger move down to 63.46, but I actually think we could get a move. I think they're going to find some support somewhere between here and 74.70. I've got to do a little bit of homework. We don't want it to get below this value area low here at 1086 and go into further price discovery lower. And we definitely don't want it to go below the range and below this key line in the sand down here at 1074. If they can get above this 86, look for them to rotate it back up into the 1091, 1092 area, and possibly come back up into this 95 and find some balance. Anything above the 1100, then I'm looking for a move back up into the 1105, 1106, 1107 area. That's where we tried to hold. It's where we found buyers the last time they came down here. This time they did not hold it, and they came down to the 1091, and they're pushing it to the lower side of that balance right now. So be careful with gold. It's got some weakness. We got to see these indices roll over in order to get a bigger move down in gold. Or sorry, a bigger move up in gold. It's got to find some support somewhere. And I think when the indices roll over, that's when we'll find support. So we're trading right now just right at the range low from yesterday. So we'll have to wait to see if we open inside a range or below range. If they open below range, watch for the chance of finding initiative sellers stepping in and ripping us down in to test that 77, 78, 50 area and possibly come down and set up for a trend day. Becky posted the put call ratios. They are increasing. There is some worry coming into the market that they're seeking protection to the downside. So we could see this. Our week open is 2073, so that's also an important number for us. So we could, let me just put this in. This is our month open as well. But right now I'm looking for whether or not, we're not going to hit critical mass today, so they could come down to test this week open here at 73. I think we're probably going to, give it one more shot up into the 89.90 level, fail from there, come back down through and chop around, or just break out and chop around down in this area between 90.50 and 74, 73 area. That's my main hypo for the day. If they get above the 90.50, my hypo changes to rotational day and a move to test value from yesterday and possibly a move. It's going to be very important if we leave this overnight low alone this morning and get back up inside of value. If they do, look for them to slowly grind their way up to take out the overnight low. Remember, 97% probability to take out the overnight high or overnight low. If they leave this overnight low alone and get into value, then we've got to be thinking about the overnight high being taken out. Right now, I think the overnight low will get taken out sometime within the morning session. That's going to be it for me. As always, trade well, trade safe, and we will catch you on the flip side.